Hi, and welcome to Foreign Affairs Focus. I'm Jonathan Tepperman, Managing Editor of Foreign Affairs. With me today is Ruchir Sharma. Ruchir is Head of Emerging Markets at Morgan Stanley. He's also the author of the new book, Breakout Nations in Pursuit of the Next Economic Miracle. A chapter of the book was excerpted in the May-June issue of Foreign Affairs. It's entitled Bearish on Brazil, and you can find it at our website, foreignaffairs.com. Ruchir, let's start by talking about the book. Give us very briefly your thesis, if you can.
Yeah, sure. Like the last decade was a truly exceptional decade for the developing world, in that never did so many countries grow so rapidly, and that too at the same time. And this is captured by one number, which is the average growth rate of the emerging markets in the boom period from 2003 till 2007 was 7.5%, average growth rate. In the 80s and 90s, this used to be about 3.5%, and the long-term average is 5%. So truly exceptional period. And I think that this happened because A, we were playing catch-up after a very poor period in the 1990s when emerging markets went through one crisis after another, from Mexico to East Asia to Russia to Argentina. And partly because I think of this global liquidity. A lot of this has been analyzed in terms of how the easy money in the West led to the housing bubbles in the various countries from US to Spain. But it also led to a massive amount of money flowing to emerging markets and giving them a lot of easy money to grow very rapidly. And I think that era is now coming to an end because capital is becoming more scarce and more differentiating. So the point of this book is that it's an economic travelogue that goes around the world trying to figure out which countries will do better than expected and which ones will not after what was an exceptional decade for the developing world.
Let's start with the losers first. Which are the countries where you predict big slowdowns?
Well, I think that the two of them to lead the case are Brazil and Russia. I think that these economies benefited enormously by the commodity boom of the previous decade. And that commodity boom had a lot to do with the fact that China grew at a rapid pace over the past decade. A lot of China's growth was very commodity intensive. And it was also due to the fact that commodities were coming off two very bad decades. The 80s and 90s commodity prices were continuously falling. And the long-term history of commodities, going back 200 years, is 2 decades down, 1 decade up. So we just had this great decade for commodities. A lot of the commodity-oriented economies did very well in this decade. But now, as I think China's growth slows down because it's entering a much more mature phase, and as I think a lot of commodity supply is now coming onto the market, I feel that commodity prices are headed lower. And the nations that got hooked to higher commodity prices are the ones which I think are going to be the big losers. Losers in terms of the expectations of growth are going to be undershot. And I think that Brazil and Russia, for me, lead that list.
Now let's focus on Brazil for a moment, since it's the subject of your piece for Foreign Affairs.
Right.
Brazil, by many people, is heralded as a big success story. It's number one, a robust democracy. Number two, it has a big middle class and has brought huge number of people out of poverty in recent years. And number three, it does have a significant domestic market. Why, and some manufacturing. Why are you so negative?
No, I think that I'm negative versus expectations. So I think that a lot of people came to believe that Brazil was this emerging superpower of Latin America. And I think that Brazil is here to stay. Its economy is of a reasonable size. No one's saying this economy is about to implode or get back into crisis mode. But I think that expectations came to be too high of Brazil. For one, despite all the hype that you talk about, over the last 5-6 years, Brazil's average growth rate has been 4%. Now, in the midst of a massive commodity boom and all the positives you mentioned, you managed to grow at 4%. And a lot of that growth also came because we got a big surge in credit growth in Brazil and because we got the positive tailwinds from commodity prices. But I think that a lot of those factors are now beginning to reverse. So I suspect that Brazil's growth rate in the next 3 to 4 years or maybe 5-7 years is unlikely to be better than 2 to 3%. And now that's a big disappointment compared to where we were. And this is what I think will change the thinking about emerging markets, that not every emerging market is destined to grow at a robust pace. There are some which will, but some which will not. Because if you grow at 2 to 3% in Brazil, that doesn't make it an any better case than the US. Because the US growth rate is likely to be similar. So what's the point about taking the risk of being in Brazil if the growth rate is going to be as low as 2 to 3%?
Now, what would Brazil need to do to kick what you call the commodity addiction, and what do you think its chances are of doing that?
I think the fundamental problem in Brazil, which got cloaked by the commodity boom of the past decade, is that government spending is way too high. Just in one simple statistic, that government spending as a share of its GDP is around 40%. That is way too high for any emerging market. other countries like Brazil, in terms of their per capita income, have a spending to GDP ratio of more like 25%. At 40%, you begin to crowd out a lot of the private investment. And here's the other problem. It's the mix of that 40%. Only 2% of GDP goes into infrastructure spending in Brazil. Average for emerging markets, 5%. And you have the other extreme, China, which is 10%. So Brazil's fundamental problem remains spending far too much on welfare and those kind of payments, and not enough on growing rapidly and allowing the private sector to do more.
I want to pick up on that point about welfare, because it's something you take the Brazilian government to task for in your article, and it's proved quite controversial because many people see Brazil's generous welfare spending as part of the Brazilian miracle and one of the ways it's helped lift so many millions of people out of poverty. Why, therefore, do you take it to task for that?
No, because I think that if you look at Brazil, what's happened, there's no doubt that over the past decade, a lot of people in Brazil have come out of poverty, and the inequality has narrowed, but it still remains very high. And it's not as if the inequality of the past decade has narrowed because of more generous welfare spending. The welfare spending in Brazil has been there through the 80s, through the 90s. Last decade, they were able to increase it some more because the growth accelerated, and the bigger pie allowed them to spend more on that. But it's not as if it's just a feature of the last decade where we saw a reduction in inequality. Inequality has been a problem in Brazil for a long period of time, and so has very high welfare spending. So I'm not sure the two are correlated at all.
The subtitle of your book is In Search of the Next Economic Miracle. So that leads to the obvious question, where is it going to be?
Well, the whole book sort of argues that the breakout nations concept needs to be about which countries are going to beat expectations and where are things turning around. And I think in this regard, I think a lot of countries in Southeast Asia are going to do much better than what people think. I think there's a turnaround in the making in Philippines, which for 30 to 40 years has been in the economic wilderness because of the political turmoil there. I think they have a new leader there, relatively new. He's been there for a couple of years. I think that he sort of gets the connection between good economics and good politics, and I think that he's sort of leading a turnaround in the fortunes of the Philippines. I think in Thailand, we are beginning to see some peace now develop after the fractions and the arguments that we saw there between the army and the Thaksin movement. I think Indonesia continues to be a good story. It's the only East Asian economy that I know of where investment to GDP continues to accelerate. And I think that that is a very positive as far as Indonesia is concerned. Of course, China has a very high investment, but in Indonesia, compared to the other countries which suffered from the crises in 97, 98, the investment environment has gotten better. And I think there are places in Eastern Europe as well, which may do well, even though currently they're all gripped in the European crisis. I think Poland has a decent future. I think Turkey is an unheralded success story in the region and a model for the Arab world as well in terms of getting the economics right. I think then there are some frontier countries like Nigeria or even Sri Lanka where the prospects look relatively more promising. So it's about this next generation of markets, because some of the big ones are already celebrated and expectations are too high.
Ruchir, that's all that we have time for, but a good optimistic note on which to end. Thank you so much for coming to talk to us.
Sure, enjoyed that.